Hello everyone, this is Andrew McNair from SWAN Capital with our May 2013 Economic Update. In this video, we're going to talk about some of the events that drove markets in May. We're also going to look ahead, what to expect in the days and weeks to come. As always, please stay tuned at the end for a required disclosure statement. We got that out of the way now. Markets were able to end May in the black despite some weakness in the last days of the month. Now for the whole month, the S&P 500 gained 2%, while the Dow gained 1.9%, and the NASDAQ gained 3.8%. Now earlier in the month, the Fed announced a general plan to taper back its quantitative easing program as the economic recovery continues. Now markets became volatile in the last 2 weeks of the month as investors processed the news. Fed Chairman Ben Bernanke clarified that the Fed will not exit immediately, but would start to tighten back the monetary policy cautiously as the economic conditions start to improve. Now, many analysts believe that the Fed's bond buying program has been propping up the markets, meaning that a withdrawal from this federal support could taper markets and have another slide in the market. While it's good news that the Fed isn't shutting down its bond program immediately, we can expect some additional volatility in the coming months as many investors prepare for the end of the easy Fed money. Now, overall economic data was positive in May. We got another look at that GDP number for the first quarter, which showed that we had 2.4%, down from the 2.5% that we initially read. The downward revision was expected due to some slower inventory growth. Consumer sentiment for May beat expectations, reaching the highest level since July 2007. Now, on the downside, the last weekly jobless report for the month showed an increase in unemployment claims, meaning that job growth looks to have been essentially flat over the last 2 months. Now, as first quarter earnings season wraps up, we can say that it was a pretty average or so-so earnings season and nothing to get really excited about. Profit margins are slightly up for the S&P 500 overall. Now, if you take out the financial sector, margins are down for all other sectors, while 2/3 of the S&P 500 companies were able to beat profit expectations. Only 40% were able to beat revenue expectations, meaning that demand was still soft and companies were able to achieve profits by doing more with less. That's a good sign. Now, looking ahead, we may see continued volatility as investors digest this economic data and continue to monitor Fed's actions. Markets have responded well to positive data earlier this year, but concerns about the Fed may cause investors to react in a different way. Now, as always, we'll be watching closely and looking for investment opportunities as markets move. Here are some of the upcoming events we have here at SWAN Capital. We have 2 Social Security classes, one at PSC and one at UWF. Don't miss those. You can check them out and get more information at swan-capital.com under the Get Educated tab, and then under that's the Upcoming Events tab. Click on that and that'll give you more information. As always, check out What Your Money Would Say at 12:30 to 1 o'clock on WCOA 1370. We're actually going to be re-interviewing Dr. Rick Harper to talk more about retiree economics. Now this is it for the 2013 Economic Update for May, and I look forward to seeing you next month. And if you ever have any questions about this update or would just like to discuss your personal financial situation, you can always give us a call at 850-380-9558. That's 850-380-9558, and we'd be happy to talk with you.